We're going to go back onto that and place a trade in a couple of minutes. First of all, let's just catch up with the numbers and the reasons why we are where we are now. So the S&P 500 and many stock markets hit all-time highs in middle of February. And then, of course, the coronavirus, COVID-19, continued to spread across the world. We saw lockdowns, markets slid really heavily. The US market, the S&P, by the middle of March had lost more than a third of its value. It dropped by 35%. To put that into context, in the financial crisis, the market dropped 57%, but that took 18 months. So this 35% fall took about 5 weeks. But since then, looking where the market was trading on Thursday night after US markets shut, so in the after hours trading, the S&P 500 had rallied by more than 30% off those 23rd of March lows. So in under a month, the market had clawed back an enormous chunk of those previous falls. Powering the market higher in after hours trading on Thursday was news of an experimental drug by the US company Gilead had seen positive responses to patients being treated for COVID-19, for the coronavirus. So many saw this as a real breakthrough, although it should be said, it's early days at this stage and it wasn't a massive sample of patients, but those early results were positive. So that definitely helped market momentum in the short term. But it doesn't explain the rest of the recovery, the 30% bounce back since the 23rd of March. We've got, since the lockdown started, there are an additional 22 million people in the USA who filed for unemployment. We know the hold that has been put on the world economy as companies either furlough their staff or people working from home, shops, restaurants, pubs, all closed. So it's had a massive impact on the world economy. Just on Friday, we had the latest data from China, and the Chinese were saying their economy shrank by 6.8% in the first quarter of the year. It's the first time we've seen a contraction in the first quarter since records began in 1992. So that shows, not surprising, I don't think, but how seriously this has affected the Chinese economy, which is often referred to as one of the major powerhouses, of course, for the global economy. So we're now in the situation where plenty of forecasts, very gloomy for the rest of the year. The International Monetary Fund saying that perhaps the recession that ends up hitting the world economy will be the worst since the 1930s Great Depression. But still, stock markets have bounced 30% off those lows in March. There is a feeling, I think, that many economies and businesses, thanks to government bailouts, whether it's paying staff who are furloughed or the action of central banks pumping more money into economies or pushing interest rates even lower. Here in the UK, we've got interest rates down at 0.1%, the lowest since the Bank of England began. So I think there are some people who would say, well, it's an economy at the moment that is almost on life support. It's been artificially kept ticking over by these bailouts. So some would take the view, when things get back to normal, we're not going to see a reset button for the world economy. It is going to take a while to pick up pace again. So one view, if you're looking at it that way, this 30% rally in markets is a dead cat bounce. Markets don't fall in a straight line or rise in a straight line. We see pullbacks. 30% is still a massive move. But some people would say, well, this is just an opportunity to go short before the market turns down again. And there are some big levels to keep an eye on that we'll see on the chart. The alternative view is that a lot of the uncertainty has been taken away from markets. Once again, investors are looking at this and thinking, well, central governments and central banks are not going to let the world economy fail. They're going to bail it out. So the sell-off has been overdone, and this is what's driven the bounce back to where we are now. Of course, no one's got a crystal ball. I would say, though, when it comes to trading, it can be expensive to get married to one opinion or another, to doggedly hold that opinion. There have been some great opportunities on the way back up in this rally. And even though you may think it doesn't make that much sense for it to have moved so far, and I think that as well. I think it is an incredible move that we've seen. Don't miss out on opportunities by thinking the market shouldn't be doing this. We've got to trade what's in front of us. So whether the uncertainty has gone from a market point of view or whether this is a dead cat bounce, there will be opportunities. We're going to set a trade up in a second and look at our existing trade. Let me just talk about the big levels to watch. The most immediate level, we are right up against it now, 28.85. It's the 10th of March high, just before the market turned lower again. After that, I think on the S&P, 3,000 is an important psychological level to watch if the market pushes much higher. On the downside, I think the most immediate major lows, which we'll see on the chart, it's the 9th of April lows coming in at 2,700. But let's put some color on these numbers, jump on the chart and look to see if we can get a trade on.